well, Bitcoin and other digital currencies really came into being only about 10 years ago, in 2009. Now, in 2014, the IRS has issued the only guidance that it has thus far issued on cryptocurrencies. In 2014, it determined that cryptocurrencies, or Bitcoin, essentially are to be treated as property, so that when you buy Bitcoin or buy a digital currency or a cryptocurrency, you are essentially buying property. So how is a transaction in Bitcoin or other cryptocurrency treated for tax purposes? If it's like buying property, then when you sell the Bitcoin, cash it in or use it even to purchase goods or services, so that you use your Bitcoin to buy your lunch or to buy a flat screen TV or whatever, you've essentially traded it in for a good or service or for cash, and it's the equivalent to making a sale of that Bitcoin or that cryptocurrency. So let's give an example. If you buy Bitcoin or a portion of a Bitcoin today, and I think it's trading, around $10,000 or $12,000 per Bitcoin, I think today, or thereabouts. If you buy $100 or $200 or $300 of a portion of a Bitcoin today, and it increases in value to, say, double what you paid for it. Let's say you paid $100 for what you purchased in cryptocurrency, and you hold it for a while, and it goes up in value to $200, and you cash it in. Well, it's like selling a stock or a bond that you had bought, and so you would have a gain of $100 on that transaction. If you held it long enough, it would be a long-term capital gain, but you would have to report that income as a capital gain transaction. If you don't, the IRS is going to be looking for you to do that. If you were to, let's say that you bought Bitcoin at 100 and you hold it and it becomes worth 200, and you use that $200 in value to purchase a television that costs $200. That is equivalent to having sold the Bitcoin for $200, taken the $200 in cash and bought the television set. So you'd still, even though you didn't get any cash out, you got the television set, which is the equivalent of getting $200 in cash. And so when you buy that television set for $200, you've actually had a gain transaction on your Bitcoin of $100. If you don't report that, the IRS is going to want to know why. So what's going on with Bitcoin? Well, back in 2014, the IRS issued the only guidance so far that has been issued on Bitcoin, when it said that Bitcoin is to be treated, or cryptocurrencies, digital currencies, are to be treated like property. That's fine. But it appears that most people who have been dealing with Bitcoin have not been reporting their gain transactions or income transactions on the Bitcoin, because there are approximately, I think Coinbase, which is like the major company that platform for buying and selling Bitcoin, indicates there are probably about 6 million holders of Bitcoin, thereabouts, and there are billions of transactions in Bitcoins. In the years that the IRS looked at, only about 1,000 people, 1,000 taxpayers, filed tax returns indicating any kind of transactions in Bitcoin. And so just recently, and as of the end of August 2019, the IRS has sent approximately 10,000 letters to individuals who they have information that they've received that these individuals are holders or have held Bitcoin or have made transactions in Bitcoin. How did the IRS get that information? Well, they issued a subpoena or summons to Coinbase, and Coinbase provided the names of certain holders of Bitcoin who are digital currencies who had over a certain amount of Bitcoin in their accounts. And so armed with that information, the IRS has sent letters, about 10,000 letters to holders of Bitcoin. The letters have been one of 3 different types depending on what the IRS views that particular person's situation to be. Either informational, you hear there are laws to be complied with respect to cryptocurrency. That's one letter. One is there's information to be and about laws to be complied with, but we have an idea that maybe you should look at your situation and you may have done something wrong. And then there's another one that says send us more information or respond to this. So essentially there are various ways that your transactions can come to be taxable if you have Bitcoin. One is, of course, if you just buy Bitcoin as an investor and you sell it or use it in a transaction, you would typically have a capital gain transaction. If you are a frequent trader and it's sort of a trader business for you, you're frequently making trades in Bitcoin, you could be treated as a trader in the business of dealing with digital currencies. And rather than having a capital gain treatment for your transactions, you could actually be finding yourself making income that's ordinary income to you because it's being treated as a trader business. If you're an investor and you have gains on your Bitcoin transactions, you're going to be taxed at the 20% capital gains rate. If you are a day trader or a frequent trader, that's your trader business, you're going to be taxed at the higher, up to 37% income tax rate because it's ordinary income. Now, if you're a miner, that's also a trader business, but we won't get into mining Bitcoin now because that's a little bit esoteric for this video. But all that to say, the IRS is aware of the large number of transactions in Bitcoin and other cryptocurrencies that people are engaging in. The fact that very few people are paying taxes on their gains or their income, and the IRS is intent on doing something about it. So if you are engaged in cryptocurrency or Bitcoin transactions, be aware that the IRS may know and may be coming to ask questions of you about what you've been doing with your Bitcoin. If you have any questions, please feel free to call and I'll be happy to talk to you about it. I'll be doing another video probably in the next day or so on another issue of tax compliance for entrepreneurs and small business owners. And until then, I hope you have a great day and we'll see you next time.